Welcome to This Week in Real Estate with Jonathan, Harmon, and Bryan Nale, your local experts on all things real estate in Middle Tennessee. Listen in as they discuss the current state of the market, the latest trends, and have a little fun while doing it. We do want to say the opinions voiced on this podcast are for general information only and not intended to provide specific advice or recommendations for any individuals. All right, y'all, we're back with another week of This Week in Real Estate, where we're putting the fun in funding.
We needed that today.
We did. And so hey, Bryan.
Hey, Jonathan.
Hey, Shannon.
Hey, how are you, man?
Good. I feel like we have a second co-host, by the way. Or I guess it would be a third co-host because we're co-hosts together. Wonder Dog Cammie usually makes an appearance, and she likes Bryan. She likes that sofa.
She loves his couch.
Yeah.
She doesn't care about me.
Yeah, I don't know, man. I think,
unless I'm throwing a ball for her to go fetch, she doesn't care about me.
Yeah,
that's true.
Yeah.
She did. Yeah.
Well, we're glad to have you there, Wonder Dog Cammie. And but more importantly, we've got Shannon Wheeler. A friend to the show, a friend to the people on the show, and a friend to Murfreesboro as well. So we're super excited to have you, bud. We've got a big announcement coming a little bit later in the show. I'm pretty excited. I'm looking down on the floor. I know what the announcement is, and I'm pumped about that. You'll understand here in just a minute. But what I'm really excited about, Bryan, having Shannon here, is Shannon usually participates in our comment section, and does a lot. Has a lot of insight and usually mostly agrees with us, but usually adds to it and sometimes disagrees, and that's okay.
He adds a complexity to the conversation every time, though. I mean, he always has good comments. So.
Well, he's always allowed to be wrong. We're good with that.
So. Well, and I tell you, I really appreciate the chance to come and be on the show. And, I really feel like us as professionals, real estate and mortgage professionals, when the markets go through changes, it's really incumbent upon the professionals to view themselves and see themselves as what we really are, which are caretakers of the market. Like the people in the market, the people buying and selling houses, making these decisions, they really trust us to do that, to be responsible caretakers. They don't have all day, every day to look at mortgage geek stuff like we do or pour through real estate stuff like you do. Yeah. And so I just want to let you guys know, you guys are two of the guys that do a really great job and really assume that role as a caretaker. I'm happy to serve in the market with you. Appreciate the chance to be here.
I think that's really good, and thank you for that. Compliment.
Also true, which is important.
But and here's the thing is we always got to remember that the market is not a thing, right? The market is just a collective group of thoughts and ideas and emotions from the people that make up that market. So within the market, it's really a whole bunch of individuals that, whether that's nationwide, whether that's just here in Murfreesboro, whether it's the state of Tennessee, whether it's first-time home buyers, whatever, there's markets, but they're all made up of people. Yeah. And if we don't take care of the market, as you said, if we are not keepers of that, if we are not stewards within that, then who's going to be?
I always feel like we've got this community. It is blessed with a lot of really good real estate agents, a lot of really good mortgage lenders, a lot of really good title companies, a lot of really good insurance agents. We got a lot of really good professionals in this community
because they start out as good humans, first of all,
and that's the core of it. And there's some bad players in the business too. So so one of the common things that you hear us talk about on the show is work with people that you can trust, and not necessarily with the flashiest or the lowest or the cheapest, but just get with good people who have your best interests in mind, and then everything will work out well for you.
Yeah, and
ask questions and
lots of questions.
And get to the.
And if you don't understand, keep asking.
Yeah, don't stop.
Keep asking.
Don't stop.
And here's the thing: you said this. The cheapest. One of the first questions you should ask, always, if you're talking to the person that in your research is the cheapest, ask them why they're the cheapest.
Yeah.
Right. And if you don't love that answer, right, keep asking questions or walk.
Yeah. In a lot of the times a market or this collective group of people making these decisions, they go through changes. And, I remember times in the market where we would go through a profound change and people would look around and they would look for the people that got them in that mess and they couldn't find them because they had gone away. So also longevity in the business becomes something that says more than just I know my craft. It says I'm going to be willing to stick through this with you, even when it's not awarding me abundantly. There's going to be times that we all are in the trenches and we're not just getting rewards and rewards and rewards. We're giving back and we're giving back, but it provides that continuity. So the least expensive are probably maybe not always the ones that have been around the longest and that can see you through the other side of a market, because you're still going to own 1, 2, 3 Lucky Lane 5 years from now when you need to do something with it. And you need somebody that remembers 5 years ago and 5 years going forward.
Yeah.
Well, and let's just face it, your job, my job, it's all built on reputation.
Yeah.
And so if you've got somebody that has been able to survive and thrive for a long time in a specific place, let's say Murfreesboro, right? In a industry that is built 100% on reputation, I'm not going to say 100% of the time, because sometimes the reputation is such that they're a specialist at being so and so, right? But there's a place for those people, right? There's a place for folks that have a certain type of reputation. But the bottom line is, if they've done that, then it's probably worth listening.
And then in saying that, you say, I thought you were going to say in a market or in a period, but no, a longevity period of time. So that means they've gone through tough markets. They've gone through, and I'll say this: all markets are tough markets. It doesn't matter what the circumstances are.
Different ways.
They're tough in different ways. Mm-hmm. So they've been through busy markets. They've been through slow markets. They've been through
buyers markets, sellers markets.
Markets that are difficult because it's hard for a buyer to get a contract. It's markets where it's difficult, where it's hard for buyers because the rates are higher. Markets where it's hard for sellers because nobody wants to buy their house.
Because we're flush with inventory. 2009 when I started.
So there's so many different reasons that a market's tough. Rarely is there ever a market that's easy. So you got to have somebody that also, not only has your best interest in heart, but has a work ethic to work through those challenging times
and to learn how to work through it before they stick their foot in their mouth.
Yeah. Well, and speaking about these things and these ideas and markets, there's the fear and greed index, right? And so, that kind of points to the headlines, not to kind of just jump straight into the headlines.
As we should.
Part of what we've been talking about is what the Trump v. Fed action is doing right now to people's thoughts and what can happen in reality.
Yeah.
I mean, talk about what that's going to be doing to interest rates.
Yeah.
I feel like it's a little bit, my daughter is a literary English teacher, and she taught me about the fulcrum, which the fulcrum is the point in a story in which things can never be the same again.
Yeah.
And in my mind, I really feel like it may not be the flashiest headline, but this situation that's happening and the way it plays out in the public arena, to me, is a fulcrum right now in this story.
Well, and I think it's got legs for a long time because, historically, the White House has not pushed a ton of influence onto the Federal Reserve. There's some, right? There's always going to be some, but not to the point where they're dictating what to do. And, you've got, and look, this is not a statement on Donald Trump per se, okay? But you've got a president that is exercising public goodwill or his own will, whatever you want to call it.
Manipulating
the will. Momentum, right? He's got a momentum, good, bad, indifferent, doesn't matter. It's there. And exercising his will over things that historically that doesn't happen.
Yeah, I mean,
you don't have that.
Over the last 26 or 27 years I've been doing mortgages. I mean, you've always had a president and a White House that just accepted what the feedback was from the Fed and then acted within it. Mm-hmm. And there wasn't sort of this direct, attempt to or position of being able to move that around. It just was what it was.
And they may ask, but they don't push.
Yeah, and they may insinuate.
That gets to the the concept of having smart people around you, and people who have expertise in areas. And if you think that you're the smartest person in the room, or smartest person at the table having the conversation, then why do you need anyone who disagrees with what you want to see done?
Do you know? I don't actually know if the triggers exist to be able to fire the Fed. Like,
They
I don't
do
think
not.
that's something that is even.
They
That's not a real possible thing. Is
no.
it?
Well, and it has to be something. It would have to be, I'm sure, something totally egregious, right? Like you get into moral turpitude and things of that nature. But
I mean, he's the chair of a board, so I guess he works at the will of the Federal Reserve Board of Directors. I don't know the answer to this.
Yeah.
I know that from what I have read, the president does not have the power to do that, but the president can exert an enormous amount of control, and if the president chooses to try to manipulate the trust of the American people and the board, and
So
that's
that's-
what you were kind of alluding to before
Yeah.
we went live. Trent, let's just skip the transition music. We're already neck deep into the headlines conversation. So, hey guys, guess what? We're in headlines and market movers now.
Well, and that's really my question is so many more people watch the Fed now. They watch the headlines. I mean, everybody can pull their
Yeah.
phone out of their pocket, and they've
Yeah.
got the 10-year Treasury, and
Yeah.
you have customers.
Yeah.
15 years ago, no customer would have ever called me and said, "Well, the 10-year Treasury is down 15 basis points.
Right.
Can I?"
No.
And like,
Yeah.
what are you even talking about
Yeah.
right now? But with that level of attention, then
and 100 different opinions on it that you can pull up.
absolutely
Yeah.
to feed whatever narrative you want.
Yeah.
If you've got a situation where, let's just say, not to get into politics, but if you just have a roughly 50-50 divide on these sorts of things that kind of lean one way or another, then if you get a certain momentum of the country or certain amount of people questioning the independence of the Fed, I mean, does that not already
It undermines
create a
the
problem?
Yeah, and I think that's what, again, like him or not, doesn't matter. I think that's one of the things that Donald Trump is superb at, is influencing, impacting the narrative, impacting the conversation, impacting the headline, whatever, and whether it's undermining or bolstering, depending on what the need is, whatever that narrative needs to be in order to influence his agenda.
Yeah.
And so I think that to me is the scarier part. Is not, I don't think he can fire the chairman.
Right.
Like, I just don't think that's going to happen. But if he undermines the trust in the chairman, that's almost worse than just firing the chairman.
Yeah.
As
Because
far
then-
as their ability to do policy.
Yeah, because then if you do that, Brian, you're the president for the day, and you're able to successfully get, the office undermined to where you can then manipulate it. Then whoever you put in, whoever you've alienated in that process, automatically has no trust in your person
Yeah.
that you've put forward,
Yeah.
right? So then you start this vicious cycle. I really think it's dangerous.
Well, and never forget that we switched a long, long time ago in this country to fiat currency. And fiat currency exists solely at the will of the people that use the currency. So if we start to undermine the system that bolsters that fiat currency, I mean, it's a potentially,
It's a challenge.
yeah.
Because if you don't believe that when you pull out that U.S. dollar, that it represents what we all agree that it represents,
Yeah.
where do you go from there?
I've always thought, for that to happen, it's like a zombie apocalypse. It's like, it's an end times kind of situation where I walk in and I've got $200,000 of U.S. American currency,
And you
you're
set
like,
it on fire.
and you're like, and I'm trying to get you to give me something in exchange. You're like, that bag means nothing to me.
Yeah, I like the duffel bag.
The duffel bag's got more value than
I
that
can carry
money
my
that's
water
inside
and
it.
bullets in the duffel bag because
Yeah.
it's all gotten down to that.
And you go to Germany in the 1930s and you see these pictures of people with wheelbarrows full of money walking up to the market to try to buy bread.
Yeah. I mean, it's a slippery sort of situation.
Yeah.
I mean,
But here's the thing, and we love the idea of zombie apocalypses
Do we?
and world pandemics and things like that being the cause of downfall, right? Of being
that's what we all go to.
Like we pinpoint a moment where it happened, right? And the reality of it is, y'all, big, giant, sweeping changes happen incrementally.
Yeah.
Little tiny bits. And we don't pay attention to this one and to this one and to this one. And the next thing you know, incremental change number 12 happens and you go, holy.
Right. It's too
that
late.
Camel's back just got broke.
Yeah. And I can't remember if it was somebody talking about going broke or somebody talking about getting rich. Same thing applies. It was one of the two, but the same thing applies. And the way they described it was someone asked them, how did you go broke or get rich? I can't remember which one it was, but they said a little bit by a little bit by a little bit, then all at once.
Yeah.
That's
and
right.
That's exactly what you're talking to. Now, the good news is that a whole lot of us are starting to look around and say, hey, wait a minute. I deal with Joe and Jane at 123 Lucky Lane every day of the week.
Yeah.
And they still need to figure out how to make good decisions with what we've got to work with. And we're just going to kind of pin zombie apocalypse now. We're watching. It's like it's on our radar. Like, that's crazy enough. But the rest of the time, I think, looking at the overall health of America, the health of our economy, there's still a lot of great stuff that can happen. And we just have to make sure we don't let it veer too far into crazy town. I think making sure that we don't get the Fed fired is going to be a big one. I think that there's some other things in the next year that are headlines of ours that are going to be things to watch maybe even more closely. Student loan debt.
Oh, yeah.
I mean,
we were just talking about that
a little bit.
Yeah, that's a big headline that we need to get to.
You had a personal situation come up with it. I've not had it personally, but that's a big deal right now.
Well, thankfully, not personally, but a member of my team
office,
has, and I think we've heard from a few of our peers, what's happening is student loans, and we're just full on transition into this conversation, I guess, but student loans are now going, they haven't collected on student loans since COVID. So for 5 years, if you had a student loan, you had it in forbearance, you haven't had to make payments. And if you were...
But some people still did.
Some people still made payments.
I just read 38%.
Some people were still trying to make their payments.
Crazy.
But and I think this is what's happened. So somebody who was like derogatory on student loans in January of 2020. And so now all of a sudden, COVID hits, and before the 90 days late, reports to the credit bureau, and they get a CAVERS claim, which CAVERS is for those who don't know, when you're doing a government loan, you have to have a clean CAVERS report. CAVERS is if you owe any money to the federal government, you cannot get a loan that's backed by the FHA, the government loan. So now all of a sudden, they just take they just wave the wand, and those late payments are now reported to the credit bureau. So if somebody's done a credit pull, 30 days ago, 60 days ago, 90 days ago, or they did a soft pull to start the process, now they're under contract, and the lender goes in and do the hard pull, and bang, their credit score might drop 200 points. That's what we've had happen. Mm-hmm. Somebody's credit score dropped 200 points from the time that their soft pull happened to their hard pull.
And there's so much fallout, y'all. So May 5th, by the way, was the date that people will start getting their notices, and all of this stuff is what I was just reading. And I don't know if you caught that. Only 38% of people that have federal student loans are up to date on them.
Yeah.
So 62% of people that have federal student loan debt are at least behind.
When you say behind, is that like they were in forbearance and they weren't making payments, or they are behind? Like
they're at least behind, like 30 days behind.
The 30-day late.
Up to the point where they declare it delinquent, which is 180 days.
So this is a huge headline here, y'all. If you are watching this show and you have children in their 20s who had student loans, or even in their 30s who had student loans, or
you're in your 40s and you still have student lones.
Yeah, exactly. If you're watching this show and someone or someone you know or love or is, they need to know this. They need to be proactively right now working on getting caught up.
Well, check this out.
I would say
understand what their situation is going to be in 2 weeks.
If you got into your spheres of influence and your past customers over the last year, and you took the first 100, I would be willing to bet that
a solid 50
or somebody in their direct family is going to have this issue.
Yeah. And here's the other thing that I just read is that, so you mentioned they're not able to get a federally backed loan. they're also not able to they're able to take 100% of their tax returns to put towards that. So in other words, if you're expecting a tax return of $5,000, $10,000, $20,000, whatever, and you've got $50,000 worth of student loan debt, they can keep your entire tax return, your entire refund, to apply towards that.
And a lot of,
If
and
you're
that'll
delinquent or if it's outstanding balance at
if
all.
they're in collections.
If they're in collections.
Okay. So where that's going to come into
and that
play.
happens through delinquency after a certain amount of time that you're back.
Yeah.
And so what will happen there is where we'll see that pop up in real estate is I think we probably all have clients who they're planning on a refund to give them the down payment. So their lease, they know their lease expires next spring. And so they're gearing up all year long to try to be ready to buy a house next spring when they get their tax refund for their down payment. And if they have student loan collections, they're not going to get a tax refund. The government's going to completely take all of that refund.
And it listed
and
several.
that could go on for 4 or 5 years for that person.
That's right.
What a
And
whipsaw effect. I mean, the conversation was about forgiveness. And now I'm thinking to myself, it's the brutal collection.
but here's
effort.
the thing, Shannon, and this is where it pays to really think through the psychology of how markets are impacted. Forgiveness was never going to happen, y'all.
Yeah.
Like, let's just say
Yeah.
that was never going to happen. That was a talking point that somebody
Yeah, I see
used
that.
in order to try to make people feel good and grab a headline of some sort and give somebody hope. It was never going to happen. It was never going to happen.
Yeah.
It couldn't.
You couldn't pass that burden to the taxpayer.
No.
I couldn't figure
it was
out how they were
$4
gonna square
trillion
that out.
with a T dollars.
Yeah.
It wasn't going to happen.
Yeah.
Is that still the amount that's outstanding?
That's what they
We
just
think
quoted in
4
there.
trillion?
And okay, ish.
Yeah.
Okay, let's say we're off by 25%. Okay, it's only 3 trillion. You know what I mean? Okay,
Yeah.
right? It's more money than everybody in Murfreesboro combined is going to see in their lifetime.
Yeah.
Yeah.
Do you know what I'm saying?
Sure.
So it's a lot. It was never going to happen.
Yeah.
So,
But because we talked about that, we continued to kick the can down the street.
Well, and then what happens is people don't make their payments. Like, why would I make a payment on this when
They're
it's
gonna
gonna
forgive it
It's
anyway.
going to get forgiven. I don't want to pay it down.
I've got so many stories of people that have just delayed, and they're just waiting on forgiveness. So, and I guess the
Meanwhile,
other
they're
question-
collecting interest.
And as a person that's got a background in education, when you're under the category and you're going through and you're asking yourself, what do we pay for as a country and what do we get in return? How does Jonathan Harmon feel about the use of that $4 trillion? I mean, what intellectual capital and has that returned amongst the people? So I really feel like on one hand, it's all owed back. Yes, they have all agreed to it, so on and so forth. But I also have my own personal questions about what was delivered to these people in exchange for this. And I look at the disclosure that Brian and I go through to get somebody to sign up for a home loan, but it's backed by collateral that's going to make them wealthy over time, and the repayment terms are clear. In this situation, these people were given more than we'll give them on a mortgage, and with no clear understanding of what they're getting in return, no real clear direction.
And all the
so I'm not
responsibility,
so sure.
all the responsibility of it being a good investment on the lender's part, right? All of that responsibility falls on the person that took the loan to start with.
Yeah. Listen to this story. I had a mortgage that closed in the last couple of weeks, and the home buyers had large deposits in their bank account. Okay, and I'm talking like $30,000 deposits, 2 of them.
So you have to source it.
Where did those come from? The university that they went to and they took out student loans for lost a lawsuit for delivering the education and delivering what they said they were going to do. So anyone who had a student loan and attended that university got all of their principal payments and interest payments refunded back to them, and whatever was left on their student loans was forgiven.
Oh, wow.
And that was by a court order. So this institution was sued and lost the lawsuit. And in this case, these people got enough money to get completely debt free and have a sizable down payment for their home.
Holy cow.
That is fantastic.
That's
it
wild.
Probably
Yeah.
didn't happen anywhere
Yeah.
near as much as it should, but
Probably not,
You
no.
know, we've talked on the show before about wage growth and how that's really a big impediment to the real estate market moving forward. Because if you have to pay cash for your houses, what would they be worth? Right. I mean, $30,000. I mean, how much could somebody pay if they had to all pay in cash? So having the education and a higher education in place to help keep up with wage growth is huge. And I feel like that's one of the things that people from my age and down just have wrestled with. How, when I was coming up, it was pretty simple. You go to high school, you go to college, you kind of, there's a path, but it's changed.
Except, okay, and having been a high school teacher, right, and specifically a CTE teacher, so career technical, right, your generation, like I say that, our generation of the three people sitting right here at least.
I was about to say,
not Trent. Yeah, bless his heart. But and probably a little bit older than us, right? We proliferated the idea that the way to success was through a college degree. Yeah. And you're not going to be successful if you don't get a college degree. And it was just like beat into us, right? If you want success, you got to go to college. Got to go to college. If you don't go to college, you're going to be digging ditches your whole life. You know what I mean? Or whatever. Yeah. And by the way, ditch diggers that are good at it, they make a lot of money. I'm just saying.
Yeah.
But all of that said, but there was nothing that kind of tempered that, right? Go to college to get a degree that's going to actually get you a job that makes money. We left out that part. Just pursue your dreams. Yeah. Go get your liberal arts, whatever degree, and maybe you'll get some kind of a job. And look, I'm not saying liberal arts degrees are bad. What I'm saying is,
you shouldn't go 6 figures in a debt to get a liberal arts degree.
That's right. Yeah. If I go to get an English degree in order to be a high school teacher, but I'm $200,000, $100,000, even $60,000 in debt to do it, we didn't teach them to do a simple return on investment calculator.
Yeah. And I'm always about personal responsibility, right? I mean, like, I didn't go to college at all. I went to the military, skipped college, and I got to This Week in Real Estate. So, my story ended up, with a dream ending, right?
Instant success.
For a lot of people, it's one of those situations where who were the players involved that said, hey, this is going to work out for you. I know I'm smart enough and experienced enough to know that this degree is likely to net you this much in the marketplace. And I've got economics professors that are going to teach you all, like all these things. But somehow it just became normal to just slap $150,000, $200,000 on somebody, knowing that was only going to have a certain economic marketable value. Yeah. And so I don't even know where you draw the line. I know that if you can't drink alcohol till you're 21 in most jurisdictions, and I know that you can't rent a car until you're 25, but you can sign up for $200,000 and we're going to hold you. I mean, like, somewhere that's just not adding up. Yeah. But you have to bounce it up with
you can get
responsibility.
You can get into all the things about universities. I mean, to the next granular level, universities are in competition with each other to attract students. So what are they doing to try to attract students? They're going to build nicer student unions. They're going to have nicer dorms. They're going to have nicer facilities. You know what that comes with is a cost. Well, how do you fund it? Student fees. Okay, so they're going to have more student fees. That's going to make tuition more. So you're going to have to borrow more money to go to that college just because that college wants you to go there instead of this college down the street. Yeah. So it's this arms race in the collegiate world that is not sustainable. And
meanwhile, we teach them that you really don't need a job while you're in college because that's going to distract you from your studies. Yeah. And you really just got to focus on your studies. I worked my whole way through college, and I worked a lot. Yeah. Right. Yeah. I'm not special, but I did, and I didn't have student loan debt coming out of college. Right. And then meanwhile, we also, because of the loan, we separate you from really cognitively understanding what you're taking into under your belt as far as debt goes. Same thing with medical, right? If I had to stroke a check for every medical procedure that I had to do, I would pay a lot less because I would ask, how much does it cost? And if I didn't like your answer, I'd go to you. And if I didn't like your answer, I'd go to him. And then I could make a decision.
Right.
Hey, speaking of student loan debt, before we clean up on that and move on to other headlines, a little wonky mortgage speak here. And I haven't checked on this in a while, so clean me up on this, but I think you can pay off student loan debt as a rate and term. Is that possible if you take equity? Is there some stipulation in there somewhere?
I'm not sure.
Basically, what we're talking about is just if you find yourself in a situation where you haven't paid, like let's say you own 123 Lucky Lane, you've gained $200,000 in equity over the last 5 years, but you were behind on a student loan in 2020. Now you need to move the wife and kids to a new school district, and you're trying to get this figured out. Can you get into the equity to pay that off? And if so, can you do it at rate and term? Is there a...
I don't know that you can do it, that would count as a rate term or a limited cash out refinance. I think you'd have to do it as a cash out. I believe. Now, what I'd encourage anybody that's thinking about using equity to pay off student loans is you've got, what are the rates? Because you got unsecured debt, and so what's the rate going to be compared to a HELOC or a second position mortgage or a cash out refinance of your first? Everybody's situation is going to be different on that. And for somebody, it might make sense to do a HELOC and aggressively tackle the balance. For somebody else, it might make more sense just to leave them where they are, but go after them aggressively. And then for the next guy down the road, it might make sense to do a limited cash out refi on their primary residence, or a rate term. A cash out refinance on their primary residence to pay those off. And it might get down to the program, like if it's their government loans and you got an FHA loan on your house, maybe, but I'd have to pull up a guideline on that.
I know it's just one of my standard questions now,
Yeah.
where it used to not be, but now anybody that's applying for our mortgage,
Yeah.
I'm asking, what's your student loan
Yeah.
scenario? Because chances are there's something.
Well, it's a good thing to ask right now in this market with these changes that are coming, because we'll have to wait and see what that's going to do to people. But
It's going to be interesting.
there's going to be a lot of people whose credit scores drop through the floor over the next couple of weeks. Is what it sounds like.
Yep.
Yeah.
Well, let's. All right, we're up against a time here. So, Trent, how about This Is Real? This is. Have you've seen this?
Yes.
This is my favorite.
Yeah.
I love this part.
Yeah.
There's a ghost in the under the cabinet, under the counter. There's a ghost.
I was like, what am I looking?
The ghost of a dishwasher.
It is the ghost of a dishwasher.
Yeah, the ghost of dishwashers past.
It's cute.
Is that a tankless water heater in the kitchen?
Looks like it.
You got a tankless water heater right there hanging out in the kitchen. I mean,
Where do you
that's
see that?
super. We put a tankless water heater in at our house, and when we did, we moved it from close to our garage and kitchen and laundry room over on the outside wall by our bedrooms. So now when we go to wash dishes, it takes forever for the water to get hot.
Yeah.
But when we go to take a shower, there's no letting that water run for 5 minutes before you get in there. It is ready to go.
Hot take on this. I think this is probably an added kitchen in a basement, like a daylight basement.
Yeah, I bet you're right.
Yeah.
That's
It's
what I
got a
bet.
walkout
Big,
basement.
like a mother-in-law suite or something.
Yeah.
Is that just
Yep.
a bucket under the sink?
It looks like
Yeah, they got to. Every time they do dishes, they gotta empty it. They couldn't get to the drain, which is above. No,
That's funny.
So anyway, that's cute, lovely.
That's a good one.
Thank you, Casper.
It is a good
Appreciate
one.
that.
Yeah, I was thinking that, Casper. Yeah, that's fantastic.
It's awesome.
That's a good take.
All right, what do
What
we
else
got
we got?
next?
Shiny penny.
Shiny penny.
All right, back to you. There you go.
All right, back to us.
Yep.
Shiny penny.
There we
Shannon's
are.
got our shiny penny
So,
and shiny meat cleaver. Ta-da!
There
all right,
it
is
is.
this
Yes,
okay?
sir.
All right. So, our shiny penny is interesting. We have a big announcement, and this is the Stanley Cup.
Why are you missing 24?
Well, it's because when I leave here, I just got this from Jason's restaurant. So when I leave here, now that we're making the announcement, that's when we're going to put 2024 here. Which
Got
we'll
it.
get to that in just a minute. We only have one spot left, but this is the Stanley Cup. What is the one for the Lombardi Trophy? This is the hardware. This is the prize for Charity Chopped in the Borough.
Love it.
So, shiny penny for this show is that we are going to have Charity Chopped in the Borough 2025, and we have a big announcement. Big announcement is we are moving back to Hop Springs.
Oh boy.
A little more room.
Oh, boy.
Very good.
So
Love
of
it.
all the years that we've done it, the one that when we ask people that have gone every year, which one they enjoyed the most, Hop Springs that year always comes up. It was hot as a firecracker. The format's going to be a little bit different, but that was the year that people talk about the most. So The thing that you'll notice about this is these are all the years that people have won Charity Chopped in the Borough. The biggest thing is we are in the house of the two-time champion, Jonathan Harmon, for 23 and 24. So that's going to go here.
I really need you to invite me over for a dinner party.
Back to back. You know, what I noticed is if you look at this, since he's the celebrity chef, his name's in the big print, and Jason Matheson is in the small
I think we flipped that for 24, though, right?
Well,
Yeah.
I mean, maybe, but you know, it's like I don't know who's Michael Jordan and who's Scottie Pippen.
Yeah.
You know, but
I will tell you 100%. I am not the GOAT. Jason is the GOAT.
well, the thing is Jason has agreed to come back and compete for the three.
The three-peat. You got to get
Yes.
him some rings.
Well, absolutely, and so that'll fill in for 2025. So the thing that I'm not sure of is what we're going to do at that point, because we're out of room on the board.
Yeah.
But I want to say thank you, Jonathan, for coming and doing that. It raises a lot of money for food, clothing, shelter in the community. We're going to have the event at Hot Springs. It's going to be September the 11th. This year, we're going to kind of take it back to the people. Last year was more of a smaller event with a VIP sort of feel. This year, it's on September the 11th, and so we're going to encourage sponsors to make a donation and sponsor for the event, and then also use that as an opportunity to send veterans, first responders, so they'll get a certain number of tickets with their sponsorship that they can send. Hey, have a beer and have some delicious food, watch the competition, and so appreciate the times that you guys have both helped and supported in the past. And so September 11th, 2025, Jason Matheson, Jonathan Harmon going for the three-peat. It's going to be super exciting, and we're looking forward to it.
It's so much fun.
It's
What a
Great
fun what a fun event.
What's it raising money for this year?
So you have three chefs that compete: food, clothing, and shelter. We've always done Second Harvest Food Bank. That's who Jason's going to cook for this year. Habitat for Humanity, Rutherford County, because I don't know if you know this or not, but I didn't know when I grew up in Nashville, Habitat for Humanity was sort of ubiquitous, and you just assumed it was a big national organization. But in the Rutherford County, Randy Allen and those guys, they have to get most of their funds from the county, right? So they need our help. And Amelia's Closet has always been our clothing recipient. So food, clothing, shelter, we feel like that's part of the big three pieces that somebody needs for that continuum to kind of get their social bandwidth manageable enough to do things.
What's really neat about this fundraiser then is that it's not that you're raising money for a cause; it's that you're raising money for three causes. And how the celebrity chef and their partner, who's usually a local, well-known chef at a local restaurant, how they perform will dictate how much money goes to the charity that they're working with.
Yeah,
they're
we're
representing.
excited about the
Yeah,
competition.
that's
We
fun.
always try to lean into the competition, and Jason and Jonathan have brought a new level. It's like if they win, it's like if Jason wins this year, I'm gonna have to make him a judge or something. I mean, it's like serious. I'm conflicted.
Yeah.
because I'm like,
Listen.
somebody come beat this guy.
So
but I'm
if
also
he-
wanting to see the three-peat. Who doesn't love a dynasty?
Dude, if he gets to be a judge, I'm gonna come just to hear his feedback on
You
dishes.
get- it's
'Cause
funny.
He is
all
so
dynasties-
much fun.
All sports, when you get to a dynasty level, there's like a backlash, right? So
Yeah.
at what point are people going to stop liking Jason and Jonathan because they
Well,
always win charity chopped in the borough?
Well, see, I think if they finish the board and then he can take this board, retire it
Yeah.
at Primrose Table, his
Yeah.
restaurant, and
Yeah.
then you can just switch between Cedar Glade and
Yeah.
Primrose.
That sounds
and just,
awesome.
And just walk away like,
That's cool.
walk away
Yeah.
on top.
That's it.
Maybe the way it goes, but yeah.
Yeah.
Knife drop.
Knife drop.
Exactly.
Watch your toes.
Cleaver drop.
Cleaver drop.
Watch your toes.
I love it. That's awesome. All right. Let's see. Last thing, we got a pro tip. We got time for that?
Yeah, let's do a pro tip
Real quick.
It'll be a quick one.
Yep. So I've got the pro tip this time, but I definitely want you guys to weigh in on it real quick. But man, we cannot say this enough. Ask questions when you get into a transaction. Ask questions and don't go it alone. So had a situation happen with new construction. You guys have heard me talk about this before. Yes, buyers. Yes, take your representative, take your agent with you on new construction. And if you don't have an agent for new construction, get one, because the person that's there does not work for you. Now, I'm going to tell you, I'll give you kind of the 2 mile up view here. The agent on site has actually been great to work with. So full disclosure, the agent has been great. They, of course, it's a big national builder. They shove as much as possible the clients away or to their in-house lender and in-house title. And that's where the wheels fell off on this deal. And started recommending things that just didn't make any sense. And thankfully, I was there for my client to say, hit the brakes. This doesn't make sense. And in this situation, the scenario was, in order to get some down payment assistance, the lender's recommendation was to add, are you ready for this, Shannon? $30,000 to the purchase price in order to get the down payment assistance.
What gross price?
Under 300.
10%.
More than
10%.
More than 10%.
Yeah.
And so it really was very simple for me to say, okay, lender, let me break this down to you. Let's do a break-even analysis on this. Oh, it's 150 months in order to break even.
Almost 15 years.
Yeah, 150. I said, no, there's zero chance that my client does this and it makes any sense. And the lender's response was, well, yeah, but they're not going to actually stay there that long. And I said, exactly.
Makes it even worse. But
Makes
go
it
ahead.
even worse. Not only that, but they're more payment sensitive, so they can save that $200 or whatever it was. And I said, you're not understanding what I'm saying. You're giving them a scenario that only focuses on the payment rather than on the wealth building aspect of this transaction.
Yeah.
And that is such a modern take. That is. Listen, I'm gonna get on a soapbox for a second.
I'm gonna be on my soapbox right behind you.
That is why when you go to a car lot right now, the prices of the cars are not advertised. What is advertised?
The payment.
The payment, right? And it's gonna be this payment for 6 years, 7 years, whatever.
Haggle-free shopping.
Right, exactly.
That's not good for the consumer.
No, that's not good.
Yeah, I obviously haven't bought a new car in quite some time.
Well, it doesn't matter. They do it on used. It doesn't matter if you buy a
it's
car
used.
at
Yeah,
all.
you go to a car
You
lot.
shop payment rather than the actual cost of the car.
Yeah.
So that $30,000 car ends up costing you $60,000, right? But you're stretching it out over 72 months. Nobody's going to own a car for 72 months. So then they just keep rolling it, and you never build wealth.
Yeah.
You stay trapped in that hamster wheel for the rest of your life, and you never build wealth. They're doing the same thing now on houses, which you said that's where you start building your fortune.
That's right.
That's where you invest. That's the first leg of the stool for wealth.
Yeah, for most people.
And you're talking about paying $30,000 more.
What if she had to sell it 2 years from now?
Right. Right.
She couldn't.
When they said they won't stay there that long, it's like that's not helping
That doesn't help the
case.
equation.
Right.
That makes it worse.
And now, how did you walk them through that? How did you get them from?
Brian's
this
take
is
on
what
this
we're
is
being
fantastic.
given.
I'll spare all the details, but and long story short, what was important to this person is a combination of payment and cash to close. And so we worked through THDA, which these builders lenders are not THDA lenders. So they have their own products for 100% financing, which is usually some sort of silent second mortgage or some sort of real second mortgage. And so long story short, this client's staying with me, and we're going to get them closed. We're going to get them into the right situation. But the soapbox that I have here is this is how, and I'm a little bit of this is almost borderline conspiracy theory, but I believe this is true. Is that you've got a lot of movement right now behind vertical integration. And what does vertical integration means? It means one-stop shopping. So like when you need to buy a home, or when you go to buy a car, that's a great analogy. When you go to buy a car now, you don't go to your bank, you go to the car lot. They have a lender list, and they pull up rates and they find a loan for you. They sell you the payment. You don't need to have your own money or have your own financing procured when you go to the car lot. Newsflash, you should. You should be your best home car buying experience will be if you have gone to whoever you bank with and you get pre-qualified for a car loan. The best car shopping experience I've ever had, I did exactly that. And I was buying a used truck, and I remember that I decided on the vehicle I wanted to buy, and then the salesman said, "Well, let's go inside. We'll talk about payments." And I said, "We don't need to talk about payments. I've already got my financing taken care of. I want to talk about how much you're selling the truck to me for."
Yeah.
A lot of them don't know how to do that anymore. Just so you know.
That's where and that's where we were able to and I it was the best car buying experience I ever had, because it put him back on his heels. And if you're making a major purchase and you can put the person who's selling it to you on their heels a little bit, you're gonna walk away in a better position from that purchase. And so the vertical integration in real estate looks like this. You have an on-site agent who works for the builder. You have an on-site, the lender is also owned by a company, by the parent company that owns the builder. They also own the title company. They are working towards getting into the insurance business. So now with this vertical integration, one-stop shopping for a house, you can go into a community. If you don't have somebody go into it with you on your lender team and on your real estate team, then you're completely at the mercy of them. And you know what? I feel, and I said this to Jonathan the other day when we were talking about this, I feel like, Primis Mortgage signs my paycheck, but I only get paid when I bring a client to Primis Mortgage.
When Brian Nale does.
Right.
So my vested interest is in taking care of the client, because if I don't have a client, then I don't get paid by Primis Mortgage. But the lenders that work for these builders, they work for the builder.
Sure.
They have no fiduciary responsibility to the people that they are providing financing for. None. They're only trying to close a deal. They're only trying to, and whatever their compensation structure is, it doesn't matter. They work for that builder, and that builder's bottom line is what's important to their job security.
And my proof of that, by the way, was in this deal. There was an advertised price, right? We were willing to pay the advertised price, and the lender,
Not the on-site agent,
suggested bumping the price up $30,000. And I said, that's not your lane, bub.
Yeah. What are you doing there? Now, so talking about vertical integration, I would ask the consumer to just simply ask some questions. And the first question is, if I don't have anybody in this process and in this funnel that is stopping somewhere and saying, hey, have you thought about this and thought about that to help me? Is that in my best interest? And it's not that you can't have success in life if you ever deal with a national company or a publicly traded company.
For sure.
That's not to say that. But I would ask you to consider the idea that these big publicly traded companies, these bigger companies, they are responsible to shareholders. They are responsible to a whole other class of investment and interest in this transaction than you, your family, or
me and my family,
or even the people representing them.
Yeah.
They get caught up. A lot of good people get caught up in doing really stupid things because they're following and swallowing the company line and what they think their marching orders are. And next thing you know, you have a decent person that's doing a not so decent thing that's not really in the best interest of the consumer.
Well,
so
and
find somebody like a Brian, find somebody like a Jonathan that can independently stop and say, okay, stop
if it's
all the
too
wheels
easy,
and let's figure it
there's
out.
usually a
the
problem.
warning sign is this. Here's the warning shot. If this takes off and this becomes the new normal, and it bleeds out of the new construction industry and into the real estate industry at large, where you have companies like Rocket and Redfin getting together. Now they're going to own Mr. Cooper, who is the servicing agent for like a sixth of the mortgages in the United States, and you have that kind of spillover into just the broader real estate world. Then there's no one advocating for consumers, right? You as a consumer, you are making the largest financial decision of your life without anybody that is really in it for you. And I don't want to see this business get reduced to that. I don't think it will. But man, over time, you see these little chips, and it's like Jonathan said at the beginning of the show, it doesn't happen with one fell swoop. It's little mergers, little acquisitions, little changes in consumer behavior. And I remember when I was in retail banking in 2012, I started mortgage in 2017. So from about 2012 to 2015, 16, even 17, everybody's like, man, why aren't we closing more bank branches? Transactions in branches are down. People are doing direct deposit. They're doing remote deposit. People are using ATM cards, debit cards. There's not a lot of cash movement. People don't come into the branch unless they need a new account. And up through that period of time, I don't have any recent data. I don't know, but up through that point in time, bank executives did not want to close branches, because when even millennials at that point, millennials were still pretty young, when they were surveyed and they said, what's important to you when deciding where you want to bank, the location mattered. Being able to go into the bank and talk with somebody about the account they were going to open, the loan they were going to apply for, the credit card they were going to apply for, those things mattered to them. And so I want to believe that when you're buying a house, having someone local that you trust on your team is important to consumers. But over time, I believe that there's so much momentum and money behind this vertical integration movement that'll slowly chip away.
You know, I wrote on my Facebook page, my wife told me, she said, you need to stop being so negative. And I was like, well, it's not negative. It's just what I see is reality where, you know, I see a future 5 years from now where you could take your debit card and already through our automated underwriting processes, Argyle and other systems, we can gather information from your employer, from your bank statements, from your tax returns, your transcripts, all that stuff. I mean, it's not too hard to imagine, especially with advances in AI, a point in time 5 years down the road where you pull your debit card out of your wallet, you stick it in a smart key box, and it runs all your data, pulls a credit report, assets, income,
verification of employment,
key pops
everything.
out if you're approved.
Yeah.
Right? You walk in. I mean, like, you can see this kind of shaping up.
Yeah.
And I agree with you. That's not going to be in the customer's best interest.
At the end of the day, there's still a lot of different ways to structure financing a house. So you got to work with somebody that you can trust is going to lead you to the right option.
Well, and it's not even that. I mean, it is that, but not just that. There's the whole concept of a real estate market takes into you have to consider so many pieces of it. You have schools, you have value, there's so many other pieces to it. And it, when you make something too easy like that, it actually undermines the value of it. Yep. Right. And you look at someone like a Zillow Group, for example, and everything that they've integrated, your scenario, totally possible. Yeah. Right. You got Dot Loop in there. You've got, they've basically built a national MLS. Right. So you've got that, you've got, a listing agent, and you've got like all these different pieces, and it's all being pulled under one roof.
Some of the societal stuff. I mean, if buying 123 Lucky Lane gets reduced to that, then when it's time to leave 123 Lucky Lane or take care of 123 Lucky Lane or realize the upside of 123 Lucky Lane, people are going to be way more apt to just be like, well, I stuck a card in and got a key. I'm just going to act like it's a hotel, leave the keys on the counter, and I'm out. Well, that causes a lot of problems.
And it's the same thing.
And it takes away that American dream that
it just becomes a glorified rental.
It's a commodity.
It amounts to.
And I think people are going to be sad if they let that happen.
Yeah. Well, and I mean, listen, I'm not the biggest Dave Ramsey fan in the whole world, but there's one thing that of all the things that he's ever taught me, right? And there's a lot of truth to this. And that is using cash, like green cash, will help you curb your spending. Because if I have a $100 bill in my wallet and I hand over that $100 bill and you hand me back a $10 bill and there's one less zero on it, that hurts. Yeah. Right? Yeah. But if I hand you a piece of plastic and you hand me back the same piece of plastic, that doesn't hurt nearly as bad.
Doesn't. Yeah, and then charge me 22% for it. Yeah. I'm still not feeling it as much.
Yeah, that's good points. Good points.
Man, thanks for having me.
Thanks for coming,
we
Shannon.
We appreciate you, Shannon. You're a good player in our arena here. We like you a lot. We like your opinions. We love what you're doing with this, and I'm excited to see it go back to
Hot Springs,
the way that you're doing it. Yeah. I'm pumped.
Take it back to the community, man.
That's it. Cool. Trent, appreciate you. Anything else real quick? Anybody got anything?
I don't think so. Great show.
Good show.
Always good to have you, Shannon.
All right. Wrap it up.
Okay, buddy.
Where's this keg of ginger?
In the cooler.
Thank you for listening to another episode of This Week in Real Estate with Jonathan Harmon and Bryan Nale, your go-to resource for all things real estate in Middle Tennessee. Be sure to like, share, follow, subscribe, and leave us a 5-star review. We will see y'all on the next one.
Now for the nitty-gritty. Primis Mortgage Company is a subsidiary of Primis Bank, a member FDIC. Primis Mortgage NMLS number 1894879, BK number 1042893, ML number 1894879. As always, all loans are subject to credit approval and product guidelines. Equal housing lender.